Index starting today, and have a futures contract on that index as well. It's the first in Asia. Joining us now is Shane Miller. He's head of flow index trading at Barclays Capital. He's one of the biggest traders of indeed volatility there as well. Why is this important, Shane?
It's important because this is an alternative method for investors to hedge an equity portfolio. Traditionally, they've had just straight put options, or you can trade variance swaps. Now you can trade these indices and these futures as an alternative way to hedge your portfolio.
Okay, how popular do you think it's going to be?
I think it's going to be very popular. If you've seen the growth of this product in the US and in Europe, it clearly satisfies an investor need. And that's the driver for all successful investment products.
How does it work then?
Well, basically, these indices, they reflect a measure of fear in the market as a whole. And in times of stress, that level of fear increases, so these indices go up. So if you own a future on this index, and the market enters a period of stress, this future will rally, and it will help you to hedge any losses you could realize in your regular portfolio as a result of that.
So who are going to be the main clients of this? Is it going to be the hedge funds? Is it going to be more niche players?
I think initially it will, because the future contract itself is a relatively it's a slightly more complicated product. So I think initially it will be the more professional type investors. But if you look at the evolution of these products globally, in the US, the first thing that started to trade was a future, and once that became liquid, we were able to structure things like the VXX, which is an extremely successful Barclays ETN. And that product is perfect for retail investors who want to add diversified, uncorrelated security to their equity portfolio.
Is it easily traded, is I guess what everybody would want to know?
Yeah, I mean, these futures trade on the exchange, so it's relatively easy for professional investors now just to go and take a position in the futures. But what we're really excited about is these second generation products, like the ETNs that we'll be able to launch once the futures are fully liquid, and they will be accessible to every.
So we get a load of derivatives, a fresh load of derivatives out there now.
Exactly, yeah, but it's important to make sure that these things actually satisfy a need. There's no point having derivatives for the sake of derivatives. But if you look at the success of things like VXX in the US, you can see that the volumes going through it mean that it's clearly satisfying a need for investors. Otherwise, they wouldn't do it in this kind of size.
Shane, talk a bit about what we've been seeing with, I think we've had 9 straight weeks of gains now. I think it's one of the longest winning streaks that we've had in Asian markets so far. How would that show up when, on this gauge of fear, as you call it?
Yeah, this is it's an action way of looking at it. Basically, what indices normally do, and in Europe we see it a lot more, is that the fear increases as the market moves down, and normally the opposite is true as the market moves up. But what we actually see occasionally in Asia is that the volatility increases on the move higher as well. So these products in a very, very rapid move higher will also perform reasonably well.
Okay, Shane, just also, what about the money, the liquidity in the system right now? Just generally speaking, are we seeing flows from the developed countries back into the Asian markets? If so, where's that coming from?
Well, we're definitely seeing it at the moment, but I think overall we have a situation in which money is relatively cheap. Well, not relatively cheap, extremely cheap.
Has been for quite a while now.
And it has been for quite a while, and now we're having pledges that it will stay that way for a long period into the future.
And so that's giving people the confidence to be investing.
It's giving people the confidence to invest, but it also means that you almost have to own some form of a risk asset, because if you leave it in some type of a more fixed income type of security, the inflation risk, etc., and the exceptionally low yields on those.
Yes, you end up with net negative interest rates, essentially.
And it erodes purchasing power.
So we're seeing, and the funds, where are they flowing from? The US, Europe, where?
They're flowing globally from the economies where these interest rates are being kept extremely low, and people have this cash, and then they're flowing into markets where people think there's the opportunity for growth, where we don't have austerity plans. So obviously that makes Asia look pretty attractive to any investors.
Shane, thank you so much for coming in.
Thank you very much for having me.
Shane Miller there from Barclays Capital, just talking to us about the new volatility index starting off today in Hong Kong. Also just looking at fund flows into this part of the world as well. That could be a record break.